So the U.S. and China were progressing towards restarting trade negotiations on October 10th and October 11th here in Washington D.C. And China's top trade negotiators and their top officials had even talked about starting to buy U.S. products again. But today, Bloomberg reported earlier this morning that the Trump administration is considering very extreme, very radical measures, basically capital controls, very strict capital controls, to try to starve the Chinese government, the Chinese economy, of more and more US dollars. Very interesting stuff. And Kyle Bass, hedge fund manager, billionaire Kyle Bass, is here in Washington, D.C. today, I think yesterday too. Not only is he meeting with Republican and Democrat congressmen and congresswomen, but he's also probably stepping into the Trump trade negotiations for China with Bob Lighthizer, who, as I've documented now with articles and research, that Bob Lighthizer is not in favor of any concessions to China, really. I would be surprised if, as long as Lighthizer is there advising Trump, I would be surprised if there's any concessions. He wants everything done in very incremental steps to give anything beneficial to China. He wants to see documented proof that China is doing what they say on trade negotiations. So today, this morning, Bloomberg reported that, and this is part, I would say, of a siege warfare strategy, where the Trump administration, through Bob Lighthizer and Kyle Bass, because Kyle Bass, over the last now 4 or 5 months, he's documented this publicly. Other people are not talking about this. I'm probably the only one in the gold community I've heard, and I listen to other sources in alternative media and gold community, where I'm correctly saying that Kyle Bass is for free advising the Trump administration on trade. So he's working with Bob Lighthizer, and he's also disclosed how there was almost a trade deal about 4 months ago, and there was a 150-page document, and right at the end, China tried to remove 50 pages of it. So that's something that only someone very close to the negotiations or actually at the table would know, those types of details. And Kyle Bass is here in D.C., and he, on his Twitter, he's talking about all these crazy things about how the Chinese companies won't adhere to U.S. accounting standards, won't allow any audits. And then today, this morning, Bloomberg reports that the Trump administration is considering, and there's no timeline on this, and this is why the stock market is spooked. Now, the stock market didn't have a big crash, but it also didn't go up when Trump was saying that there's progress in trade negotiations. That if the stuff that's being reported on this morning is true, there is no progress on trade negotiations, or any progress there was is long gone now, because these are very extreme capital controls that Trump is proposing. This is part of a strategy, like I said, siege warfare, to constrict around the Chinese economy and basically plug the holes so dollars can't come in. And Kyle Bass was putting on his Twitter how a couple days ago, how a top Chinese official, I think the head of their version of the Securities and Exchange Commission, he's now the head of I think, the Chinese Stock Exchange. This guy, Jiang Feng, former head of the Chinese SEC CSRC, and now head of Shanghai Stock Exchange. He's been making the rounds in D.C. This was from yesterday on Kyle Bass's Twitter, and telling D.C. congressmen that Chinese companies don't need audits, and trying to get Chinese companies into the MSCI, which is a Morgan Stanley global stock market index for emerging markets. So this has been a roundabout way that Chinese government has been trying to get American investors retirement money. So even Americans who support the trade war and don't trust China and support President Trump, their retirement savings in 401ks and IRAs and index funds some of it has been indirectly rerouted to the Chinese economy and into the pockets of the Chinese government. Through Emma Mollman reported this, my hedge fund friend, who I interviewed, I think about 3 or 4 months ago. She's brilliant. She's a CPA and a CFA, and I think she's working on a law degree too. And she works at a hedge fund too. So she's she's doing a lot of things right now. But she reported that Michael Bloomberg, his global bond index fund, the Chinese had gotten Chinese state-owned enterprise bonds in there without any audits into there, and that around $3 trillion of retirement money in Europe, European Union, and the US was going to be headed towards China then, and that the Chinese government was going to take a lot of it. So it appears that the US is now aware of these facts, what the Chinese government was trying to do with putting Chinese companies' stocks and Chinese companies' bonds into these global bond index funds and global stock index funds and global emerging markets index funds, and trying to reroute American retirement dollars, and is attempting to stop that. So Trump, it hasn't been announced yet officially, and there's no date on this, but the stock market is clearly spooked about this because the stock market does not like uncertainty. Also, the dollar on the dollar index is still above 99. So the dollar has rallied still. It stayed above 98, and even today, even though it was down a little bit, it closed above 99 at 99.11. So the dollar is, on the dollar index at least, strong. Okay, so the two things that Trump was talking about are delisting of Chinese companies from U.S. stock exchanges unless they allow more stringent audits, and then limiting Americans' exposure to the Chinese stock market through government pension funds and other index funds. So there's no timeline on this, but people are very, very worried. And yes, Kyle Bass is putting on his Twitter that Chinese companies not being audited, and it's meant to protect American investors, and that is part of it. Because the China hustle is real. It's extremely well documented. Go watch the China hustle documentary. So I think if you want to buy the pay version, it's a couple bucks. It's worth it. It's a very entertaining 90-minute, 2-hour documentary. Very, very good. One of the best documentaries I've seen in a while. But this is all, the main reason is not the audits. So Kyle Bass is tweeting about the audits. That's not the main reason. The main reason is to exacerbate the China's dollar shortage. Because China, I've documented this a lot with a lot of different stories that many people in the gold community, many people in the alternative media refuse to acknowledge, because China has lots of gold. We don't know the exact amount of gold that China has, but they assume because China has lots of gold that they don't have nearly the problems that every other country does. And if Trump does implement these strategies, yes, the audits, I'd like to see all these companies have more audits. I'd like to see the Federal Reserve audited. I'd like to see more transparency everywhere, but unfortunately that's not going to happen. The audits are just an excuse. The main reason, guys, is to really tighten the screws on China's dollar shortage, because they are rationing dollars. They have some US dollars left, but they don't have anywhere near the amounts of dollars left. China's currency has been, on the exchange rate to the dollar, has been somewhat stabilized. It's not running away like crazy like it was at the beginning of August and for the first week or two of August. The exchange rate has come down a little bit, so it's not being massively devalued nearly as quickly. But my educated guess is that China is using a lot more of those derivatives. I would love to get Kyle Bass on for an interview and try to get a quote from him on what his estimation on the exact amount of the forward dollar swaps that China has sold, because they're not using as much regular dollar reserves to defend their currency. They blew through $1 trillion in reserves, from $4 trillion down to $3 trillion in only about 12 months. From 2015 to 2016, defending their exchange rate on their currency. So other China stories that tie in with this: China's August industrial profits fall as headwinds hit firms. So profits at China's industrial firms contracted in August, reversing the previous month's brief gain as weak domestic demand and the trade war with the U.S. weighed on corporate balance sheets. The industrial profits fell 2% in August from a year earlier, according to China's own data from the National Bureau of Statistics on Friday. So there's a lot of headwinds there. We all know about the higher pork prices and the other problems in the Chinese economy. The other story that I found yesterday was that China's new Social Security fund, which is much smaller than the U.S., it's already bankrupt and has to be bailed out. So the finance ministry is going to transfer bank shares to the Social Security fund. This story is from Caixin Global from yesterday, from Guo Yingzhe. China's Ministry of Finance will transfer around $16 billion worth of shares it holds at two state-owned banks to the National Social Security Fund in the government's latest effort to stem a looming pension shortfall. Both Industrial and Commercial Bank of China and Agricultural Bank of China issued statements on Wednesday saying that the Finance Ministry will transfer 10% of its shares in each entity to the National Council for Social Security Fund, the government body charged with making up for pension shortfalls. The move is another message that authorities are accelerating top-ups to the country's pension system. Last week, the government ordered state-owned enterprises to stop dragging their feet on mandated equity transfers to the Social Security Fund. And by the way, the state-owned enterprises not paying their bills on time either. This is very well documented for the last 6 weeks. Social Security Fund, which were launched by the State Council in 2017 and aimed to shrink the gap between the revenue and expenditure of China's pension funds as the country's population rapidly ages. And remember, I sent you guys a link with a Twitter link to a video of a protest of pensioners in Guangdong province who were not receiving their pension checks. So all is not well in China, despite what the gold community claims. Most of the gold community. The delisting of Chinese companies is not going to happen immediately. There is not a time frame for that. Also, recently there was another story that was reported on a Forbes article and elsewhere, but I saw it on a Forbes article, that China is now appointing government officials at the top of management and the board of directors for all the major Chinese companies. And remember, Chinese banks are also the big four Chinese banks, which are all state-owned enterprise banks. They are very close to being removed from the SWIFT system because they are doing deals with Iran. And that's a big no-no for the U.S. The U.S. does not want China doing bank deals with Iran. So that would be the excuse the U.S. government needed to remove the four large Chinese banks from SWIFT, which would, Kyle Bass has talked about this as well recently, saying that it's more likely than not. Kyle has said this a number of times in public interviews in the last month or two. And that would be another part of the strategy to this siege warfare strategy to starve the Chinese of more dollars. And then China is rationing those dollars, and they don't have the dollars to save all their banks. They don't have the dollars to save all their private companies. They don't have the dollars to save all their state-owned enterprises that have enormous dollar-denominated debt. And then they don't have all the dollars to import from international markets all these metals like copper and other base metals. They don't have all the dollars to import all this other food from other countries unless they have a trade deal with an emerging market country on beneficial terms. So it's very interesting that Trump would decide to do this because Trump does not want the stock market to crash. And if Trump persists with this, the stock market could crash. If you get news out whenever this would happen about Chinese companies being delisted, I could see the stock market in a couple weeks, a month at most, be down more than 10%. And then the Fed would start to panic as well. Jack says Alibaba is doing well. Hello, Jack. I don't think you've dug in deep into the financials because I know hedge fund managers. I get copies of old, very expensive China hedge fund quality research reports that show in great detail that most of Alibaba's financial statements are 100% fraudulent. And think about this. I know people, and I've looked on prices for stuff on Alibaba, but I know people who buy things on Alibaba, and a lot of the stuff is very, very cheap you can buy on Alibaba. If the shipping is so expensive and the stuff you buy is cheap, how do the people on Alibaba selling from mainland China, how do they make money? And the answer is very simple. It's because the Chinese government subsidizes all the shipping. So the goal was to just bring in dollars, and the Chinese government was subsidizing all the shipping for Chinese companies. But there's a lot of fraud in the Alibaba financial statements. The average analyst here in the U.S. that looks at the financial statements won't spend any time doing this. I've seen enormous details of the crazy amounts of fraud in the financial statements. There's also the Mysterious Five. Yes, Jack Ma was ordered to transfer, I think either almost all or all of his equity position to 5 people, unnamed people with the same address. Miles Kwok has talked about this in the past, and so has Kyle Bass. Go listen to the Miles Kwok interview that's on Real Vision TV. And he made some interesting predictions about Jack Ma and Alibaba. The Chinese government has been subsidizing basically all of the shipping for a lot of Chinese firms to sell on eBay and Alibaba for many years now. So they would bring back dollars. Can I give some comments on India? I'm not an expert on the Indian economy, but I think their bureaucratic stuff is a mess. And then I keep seeing hedge fund managers and other quote unquote experts that say that when India does more bank bailouts, that it's really good. And India's done, I think, 3 bank bailouts, series of bank bailouts in the last 10 or 15 years. It's a lot. So I think India's also a bureaucratic mess. Indian people are consuming more, but it started off at a low base. I mean, the cars that are bought in India are very cheap versions. What Tata Motors, they're very cheap versions. Apple is not selling well in India. There's cheaper versions of it. The Chinese, look, Apple's getting killed now in China too. Apple's market share is, I think they're down. I've seen research reports saying that not only were the new iPhone sales like they totally flopped in mainland China, but now I think Apple is down to number 6 or number 7 in market share and falling like a rock in China. Oh, thank you, Greg, for the super chat. I appreciate it. So, Jack, the shares, I'm not predicting a crash in the shares of Alibaba because I think the average retail investor or the average analyst on Seeking Alpha knows absolutely nothing about how to look through the financial statements. They only look on the face of the doctored financial statements and see that they look pretty good. They won't do any deep digging. But when I speak to hedge fund managers about the financial statements of Alibaba, they're all like shocked that the stock is still going up like crazy. Because they just tell me details about the stuff buried in the financial statements that they've had access to from these very expensive hedge fund newsletters. And it sounds like to me that the financial statements for Alibaba that are released publicly are 100% pure fiction. Well, either 100% pure fiction or close to 100% pure fiction. Rick says he votes to walk from China. We don't want them and we don't need them. Only the rich globalists benefit. Yeah. So I think China, once he took over in 2012, and it's been increasing more, China has actually, besides having emerging markets over the barrel, China has been very isolationist with wanting to make products in China. That was the goal for a while. I'm not sure if they're still sticking to China 2025, but the goal for China has been to become more self-sufficient and more isolationist in a lot of different ways. China has been talking about wanting to mine their own iron ore, and they're saying that that's from a position of strength, that they want to only mine iron ore in China. But I think that the truth is that it's very similar to, because of the dollar shortage, also very similar to why they mine gold, because they can subsidize all the losses of mining gold. It takes around $2,000 an ounce to mine gold in China. None of their gold mining, and they are the largest gold miner in the world at around 400 tons per year of gold. None of their gold mining is economic. It's all subsidized. So they don't care what price the gold is produced at. And I think the same thing will happen for their iron ore mining. So they don't care what the grades are for the deposit. They don't care what the costs are. They just don't have the dollars because of the dollar shortage and their derivatives position and and the banking system problems, all these other problems. They just don't have the dollars to go onto the international metals markets and go and buy stockpiles of metal like they used to. China does not own a lot of America's debt. According to the TIC reports, they now own less treasuries than Japan. China owns some treasury debt. That's inaccurate. China owns, around 1.1 trillion in U.S. treasury debt now, and Japan owns more. So anyone who's writing that China owns all this treasury debt and will crash the dollar, and they're repeating this stuff ad nauseum, they don't understand how things have changed in the last 2 years or 3 years. And then China's economy, a lot of things have changed a lot in the last 10 years and even more so in the last couple years. There's rumors on Chinese social media that those treasuries were pledged as collateral to get to the repo market. I don't know if they're true or not, but there's rumors. I think more likely than not that the repo madness was from European banks. Great question by Neocraft. Why do these people keep saying this about China and the USA debt? Because they own a lot of gold, and a lot of people either live in the US and they're hypocrites. They either live in the US and hate the US government and they own a lot of gold, and they're rooting, even though they make their money here and live here, they're rooting for their gold to go to over $10,000 and for the dollar to collapse and the US government to collapse and for themselves to they think they'll get rich if gold goes to $10,000 or higher. And this stuff keeps getting repeated, like nothing has changed in the last 10 years. China has a legit dollar shortage. The repo madness is still happening. I was planning on doing a separate show. It has dropped. Today it dropped. That doesn't mean it can't be up tomorrow. We have, without transparency, without actual Federal Reserve audits, we have no proof that the Fed is actually accepting good collateral, and I'm using air quotes, good collateral as in U.S. Treasuries, and that they're not buying up bad collateral. We have no proof. And this is why I was going to talk about this in a separate show, so I'll read more articles on that. I don't have the articles up. But this is why, since March, the St. Louis Federal Reserve was writing research papers about how there needs to be a permanent repo facility, and the research paper was predicting this type of repo madness back in March. It's projected that there's going to be a permanent repo facility offering between $300 billion to $500 billion for the banks. And Danielle DiMartino Booth called this quote-unquote QE on demand, end quote. That is behind that interview with another former Dallas Federal Reserve employee is behind the paywall on the Real Vision television subscription. Oh, thank you, Austin, for the super chat. I appreciate it. China can try to de-dollarize. Here's the thing, though. When they do an oil deal with Russia and China pays for the oil in yuan, guess what happens? Russia takes all of that yuan, and in less than a month, they dump it all on the offshore foreign exchange market. And then the People's Bank of China has to soak up all that yuan so it doesn't crash the exchange rate. And guess what? They have to sell dollars. So Russia's not holding the currency. Russia's not holding the yuan. Russia wants the dollars. This is a PR, it's a PR move, and the gold community and the alternative media fell for it. The dollar is still king for international trade. So when these trade deals are announced, the Petro Yuan and China bought oil and natural gas from Russia, and they used yuan. Okay, great. But Russia didn't hold the yuan. Russia dumped it as quickly as possible. No, Russia's not killing China. Russia's not killing China. They want out of the dollar. There's just not a viable alternative yet. Neocraft says China's killing China. 100%. China's made a lot of mistakes the last 10 years. A lot. Bad central planning. Really bad central planning. Credit bubble, housing bubble, debt to household. GDP is enormous in China. It's gone up fivefold in the last 10 years. Household debt to GDP, I think, was around 10%. in like 2007, 2008 in China. It's now at 50%, five-fold increase. AJ says dollar's not going to crash unless lots of countries abandon it or we get some type of reset and new system. We could also have a Plaza Accord, which I was corrected at 1985. The Plaza Accord, the U.S. agreed to devalue the dollar by 50%. Guess who was the trade negotiator? Guess who was the trade negotiator back then? Bob Lighthizer. So Bob Lighthizer was in charge back then of renegotiating trade deals, because Japan was trying to doing similar things to China, and then he put up big tariffs to get Toyota to open up factories here in the US so Americans would have jobs, more jobs. And then the Plaza Accord, the dollar was devalued. However, in exchange for that, the US got beneficial trade deals. So that could be a version of a reset. I don't know if it would fix everything, but it would be a version of a reset. And I don't think that's a panacea either. And it would be a trade-off situation where some Americans would get a lot more jobs if the U.S. renegotiated trade deals and factories were moved here and Americans had to be hired, but then other Americans holding dollars in savings and would lose purchasing power and their standard of living would be declining. It would be a trade-off where the U.S. on press releases, Trump could say, look, I brought these millions of jobs back with all these factories that are coming here from the trade deals. Meanwhile, the dollar is devalued and a lot of Americans, their standard of living is declining. Thank you, TL, for the super chat. Thank you, Lenron, for the super chat. Thank you, Yak Yak, for the super chat. Recommendations on learning how to read a balance sheet. There's a YouTube videos, and there's also for basic accounting, for bookkeeping. I took an MBA class, so I learned how to do it through that. I'm an MBA program dropout too. After about a year of MBA classes, I knew more than my professors, and one of my professors worked at either the Zimbabwe Central Bank or the Democratic Republic of Congo Central Bank. I can't remember, but he was telling some really crazy stories about corruption and money printing. I mean, both countries are ridiculous. Sean asks, when Russia receives yuan, how exactly does Russia get rid of it? It gets dumped onto the international foreign exchange markets, which are very large. There's trillions and trillions of dollars in currency traded per day with leverage on the international foreign exchange markets. So it's actually very easy for countries to dump currency on there, and very easy for hedge funds and investment banks to trade with leverage and move money around and manipulate currencies and exchange rates. But the People's Bank of China then, and I heard this from my top China source, they come in after the oil deal is announced and, oh, look, we got around the dollar. We did this large oil deal in yuan. The press release is announced by Russia and China and sent around to the news agencies in the gold community and RT and others. And then meanwhile, the People's Bank of China has to go and soak up the RMB so the currency doesn't have enormous problems. It is, Sean Whelan says China has to maintain their currency peg. It is very expensive, Sean, for China to maintain the currency peg. That's why you're seeing problems in Hong Kong. These currency pegs like euro pegs and dollar pegs, they eventually break. Switzerland could only hold the euro peg for about 3 years. They were printing so many Swiss francs. They created over $300 billion of currency out of thin air in only 3 years, and that's how they started their own hedge fund. Their technology and stock market hedge fund. And China blew through, Sean, China blew through $1 trillion of their reserves, from $4 trillion down to $3 trillion in only 12 months, from 2015 to 2016, defending their currency peg and other problems in the Chinese economy. Rob says China can no longer afford the peg. They don't have the reserves to use for everything. They don't have the reserves to import metals. They don't have the reserves to bail out their banks. They don't have the reserves to defend their currency peg. They don't have reserves for everything. That's why dollars are being rationed in China, and that is why China's derivatives position on selling forward dollar swaps has exploded, because they don't have the dollar, so that's why they have been using the derivatives instead. David Jansen, you could look up his work on Twitter. I think it's Jensen. He's also writes for safehaven.com, I think. Safehaven.com. And he told me that he has the estimates for China's derivatives position on forward dollar swaps at $1 trillion. But I believe I'm trying to get the exact number from Kyle Bass's opinion. His opinion of the exact number. But I'm pretty sure it's a lot more than $1 trillion. There's been reports from Reuters quoting Chinese bankers, both onshore and offshore Chinese bankers, and other news outlets, that the amount of derivatives sold, the forward dollar swaps, has increased a lot just in the last 6 weeks. There's been a number of stories out about this. Again, the gold community is not covering this. Doesn't fit the narrative. No one's paying me 6 figures to write gold pumper articles nonstop. No one's giving me stock options on Toronto Stock Exchange companies and in 6-figure salaries to write nonstop gold articles about how China is going to crash the dollar. China has 20,000, 30,000, 40,000 tons of gold, and everything's going pretty well in China, and they're executing the plan perfectly. I'm just trying to get you guys the best information and analysis possible. If things change, my opinion will change. And I was actually a China bull. I was big with Jim Rogers, Peter Schiff. I was a big China bull for years. And then the more I started studying China, a lot of the stuff that people were saying about it didn't add up. I was a tiny little victim in some of the China hustle. I had some small positions in some of these China companies. I lost a couple $100. The accounting was totally fraudulent years ago, 2008 and 9. I was buying some Chinese companies, and by 2010, and I was looking, things didn't make a lot of sense. Hey, Sean, I think you're new to my channel, so thank you. I think we have a mutual friend, Tho Bishop, right? I think I saw you on Facebook. Take a look at Denny McMahon and China's Great Wall of Debt, if Tho told you about that book. That book's really good. This is the only way it works, because I've tried different size images, and they don't work. OBS is difficult. Okay, guys, well, there's some college football on right now, and going to go take a break. I may be back on later with another live stream. I was working on a Repo Madness one, so maybe I'll save that for tomorrow. The Repo Madness stuff is crazy. Like I said, the Fed, Danielle DiMartino Booth, I respect her, but there's mixed signals out of her. I think she's a Fed apologist. I think she's a smart, brilliant woman, but her loyalties, I think, still lie defending the Fed. Her interview with Hedgeye recently, the tone in there, the comments about the Fed are very, very different than the tone with George Goncalves, who was also a former employee at the Dallas Federal Reserve, behind the paywall on Real Vision TV. Big, big difference. I don't hate China. I'm just trying to give you the best information possible. The reason I have around 150 Patreon account contributors is because I'm giving you guys the most objective, honest information and analysis possible. If information changes, my opinion will change. If something changes drastically, my opinion will change. There was a lot. I just found this out. I didn't know it. I didn't know that. But Danielle DiMartino Booth and the Dallas Federal Reserve Insider disclosed that there was a lot of foreign central bank and private foreign bank money docked at the Fed, earning interest on excess reserves. I didn't even know that. I thought it was mostly the largest U.S. banks who were earning that. There's foreign central bank money, a lot of it, hundreds of billions of dollars, parked at the Fed, stealing money from the U.S. taxpayer. Parasites. There's parasites everywhere, though. No, I think Danielle doesn't want to get rid of the Fed, though. So Danielle has presented at the Mises Institute before at their presentations, but she makes fun of a lot of libertarians and Austrian school people because she does not want to get rid of the Fed. I think she's just a regular Republican. I mean, I like Danielle, and I've interviewed her a bunch over the years, but I don't agree with everything she has to say. Probably I don't agree with half of what she has to say. But some of her insights and analysis are incredible, especially on the bond market and the valuations with private equity and some of these other crazy things. Yeah, her global macro research is really good. I know how hard she works. Thank you for the super chat, Sean. I appreciate it. China is collapsing. Payback is a biatch. Says Freedom Prospector. China's having a lot of problems. I don't know if they'll collapse, but I think they're on the verge of a currency crisis in the next couple years. There are very serious problems with their reserves. Kyle Bass thinks it's below 2 trillion and falling rapidly. Their official reserves position is 3 trillion. Kyle Bass has said publicly on his public interviews he thinks it's a lot lower than 2 trillion. And falling rapidly. Goncalves. I can probably have Emma back on in the near future. I was trying to get Kyle Bass. I just sent some messages. I was trying to meet Kyle Bass for a beer later. He's here in DC. I don't know if he'll respond. Because he's a billionaire and I'm just an analyst and a podcaster. Although I hear he does listen to some of my interviews and likes them. He liked the Denny McMahon interview. That's what I hear. Okay, guys. Well, that's it for right now. Thank you very much for your time. There might be, for the person in the super chat here. One more thing. So I just put up, I get all these emails and comments about people who want to donate Bitcoin, Litecoin, Ethereum, Bitcoin Cash. Some of these, there's a couple other cryptos. I now have the address. I have a wallet address for those if you want to send me some tips that way. So I will put, those will be in the information and description section of the video, like about 30-40 minutes from now after the show's over. I'll put that in the information and description section if you want to send me a tip with some cryptos, with some Bitcoin, Bitcoin Cash, Litecoin, Ethereum. I think there's a couple other. There's 6 addresses I think I have. So that's available. But now that I mentioned crypto, Bill Holter is probably going to reach out and call me a crypto pumper again. There's going to be another blog article. The fact that I'm even mentioning crypto at all, it's going to be another crypto pumper blog article. I should make a t-shirt with his face on it and then like saying Jason's a crypto pumper. No, I don't think any of these countries want World War III. I think we're headed towards more cyber warfare first. Yeah, maybe I'll take some silver. Send me an email. We'll talk. Okay, well, thank you very much for everyone's time tonight. I know everyone, the weather here is really nice. And my birthday's a week from today. So I appreciate everyone's time and have a great weekend. And thank you very much again to my 150 Patreon account contributors who are making my life a lot easier. My almost a dozen monthly PayPal contributors. And people throw me a tip once in a while. And now you have the ability, if you want to, you can send crypto. And I'm probably just going to hodl it for now. I haven't sold any crypto. So I've just been hodling everything. The tax bill's too high on the crypto to sell it all. And I think like if they keep devaluing the currency, crypto will probably have one big more spike probably in the next couple of years. Okay, guys. Well, thank you, guys and gals. Thank you, everyone, for listening. That's it for now. I will put links to the stories that I mentioned. And also, Kyle Bass has been tweeting like crazy about this stuff the last couple days. And a lot of the stuff Kyle Bass is tweeting, guys, Trump, a couple days later, a week or two later, Trump starts talking about. So, if you have a Twitter, might want to if you have a Twitter, might want to follow Kyle Bass on Twitter. He seems to be helping a lot with the trade negotiations. But as long as Bob Lighthizer there and one of Trump's, if not the most powerful advisor for Trump, I don't think we're going to have a trade deal. Lighthizer does not seem interested at all in a real trade deal. So Trump can talk about it to try to move the stock market higher. Meanwhile, if you do the research, Lighthizer doesn't seem interested in one at all. Oh, thanks, Jim, for the super chat. I appreciate it. Okay, guys, bye for now. Thank you for your time.